I've been using the same trading strategy for roughly 7 years now, and that's a long time. Of course, I tweak it a lot along the way. There's been a lot of changes to it, and it evolved quite a bit. Today, I want to share with you how I've been able to create my own strategy, step by step, the things I went through, give you some tips and tricks to make it better for yourself, so that you can save time and get a better result than I did the first time. So let's just dive right in. So 2015, I believe, from my memory, is the first time that I traded my current strategy I trade now in the market. Now, this is one of the few strategies I trade right now in the market live, but it's been going on for a very long time. And if you're at a point in your trading now where you want to be able to create your own style, your own strategy to be better at it, so that when you have your own thing, you tend to, first of all, be a master at it. That's a lot better. You are able to achieve a lot more that way. And you don't have to rely on anyone else for giving you answers or feedback on how to do things better. It's your own thing. You're responsible for making money with it, and you can tweak it as you want. And you know the ins and outs of the strategy by heart. It's easy for you to fix it, to improve it, to make it better, to make more returns, and to build a whole career out of it. Now, yes, you might need more strategies over time. It's not only one thing forever that will make you successful. But we'll start with one thing to be able to focus on that first, and then you can scale up to other strategies in the future. Now, here's my very first piece of advice for you, and that made a big difference for me. A lot of people will go on Google, search for trading strategies, or profitable swing trading strategy, or profitable reversal day trading strategy on YouTube. And these things are fine, but I want to help you stay away from copying other people's strategies, because the fact that you will never become the master at it, you'll always feel like it's someone else doing it, and you never really fully understand it unless you spend a lot of time into it and a lot of time trying to work it out. You never want to build a trading career out of copying other people, out of being dependent on other traders who could be there or not be there one day, and that's a big issue. What are you going to rely on and what you can find online, though, are not strategies, but they are ideas. So find ideas, but not strategies. In the sense that if you have ideas, you can put them together yourself. You can grasp things from different websites, different places, put them together and make it your own. And from there, you're able to create something that you understand, that works your style, that fits your personality and fits your style. So for me, when I began trading, and for the first 2-3 years of my trading journey, I was just accumulating ideas and thoughts I was finding online. Things that might work, principles in the market that could be helpful for a strategy. So I would go on some websites, I would find how they do things, what they look at the market, then I would kind of think, oh, that's interesting, that makes sense to me. Oh, this doesn't make sense, it's like not working for me. For example, Fibonacci is a tool that I never use, that I don't know how to use, that didn't make sense for me. But Bond are a tool that makes sense for me. This is a tool I like a lot, and I therefore use Bond for my trading. So the goal is to find ideas, principles you can relate to, and note them down somewhere. Maybe have a notebook near you, have something you can use to note these down. It could also be like these days on the computer, of course. You're able to note these down on any kind of note app. And then later you're able to kind of go back to them and find something that works by combining these things together. So for myself, when I found out Bong, I started to look at setups over them. I started to look at how people are using it for trading. And I kind of combined candlesticks and Bong together, which back then there was not many people doing that. Now these days it's more popular. As I do more videos about it, it seems like it's popping up everywhere now, these Bong reversal strategies. But back then it was not many people talking about these things. I also added a few tweaks to my setup, to where I changed the entry, I changed the stop loss a little bit to make it better. And I also combine where to trade, when not to trade in the market, based on what I learned over the years. Now, the second thing is a big mistake I made in the early years of the strategy. I was creating a very good setup, but I was trading that setup all the time the same. I was never really out of the market. Every time I would see a setup on the chart, I would enter the trade right away. I was trading the forward chart and the 1 hour charts, and I would enter every single trade I would find on these time frames with a Bong and my setup on it. Now what this led to is, you can imagine, a couple of drawdowns, a couple of losing trades that were maybe too much compared to what I was supposed to get. And I had to eventually get a coach to help me improve that strategy, because I was trading something that I thought would work. It was an awesome setup. In a backtest, it would work really well, but in live or demo trading, it didn't work well. So why is that? And what I learned from that coach, first of all, it cost me a lot of money, but it was definitely worth it, is the fact that all trading strategy should be based first, not on a setup, but on a market context. You gotta understand the market context first. The context is when and where you're trading the market. The setup is how you enter the market. Now you need to have a place where you trade first, a location where you trade first, a certain market environment to be able to place trades in. You're not gonna place trades everywhere you want. It's only based on that environment, because you know in this environment it's likely to work. But in this other environment, it's likely not to work. And you want to be trading only when it's likely to work in the market. So understanding the market context, market environment, market structure, you call it how you want, it's all the same terms, was really helpful for me, made a big difference for myself. What I would recommend you now is if you create your own strategy from scratch now, use this thing first, understand the market context first, and then build setups around it. Okay, when it's trending, you want to trade trends. When it's sideways, you want to trade reversals. Just these two things will make a big difference in creating your own style. From there, once I had this market context plus my setup, I backtested the hell out of it. I went to backtest for weeks and weeks on different pairs, see how it would perform on different time frames, and I was getting a better picture of the strategy by doing that. Now, the backtests are not just to prove that your strategy works. They're to get some data, some statistics and metrics on how it's going to perform over time. What kind of drawdown you can expect, what kind of win rate you can expect, what kind of bad trades you can expect in the market. A lot of people don't do backtests because they think, oh, it's boring, I'm going to just trade it live, a demo, and then see the results. Or backtests cannot predict future results. I'll tell you they can. If done right, if the strategy makes sense, if it's logical, the backtest will lead to something similar to the result in the future. Now, that's not accurate like 100%. It's never going to be the exact same metric, exact same figure, but you get a better idea. Like, what else is it than a backtest? What can you do to find if the strategy will work other than the backtest? Well, you can't. The other way is, of course, trading demo for a few months, which is going to waste a lot of time. You could do this a lot faster with your backtest. Now, that's also where you can start to tweak things, see how things don't work out, see how things work out. By the way, I have a whole video on my channel about how to do backtest properly, the whole method, which I'll leave linked in the corner over here. So that video will help you kind of go through the right steps and not mess up anything there so that you have good results after. And that's going to be a good thing to learn how to backtest and tweak your strategy after. Something I learned over time is that any kind of backtest you do should be able to reach some kind of metrics. And I know it's hard to like set a specific metric for each strategy you have, like a specific number you got to reach, because it always depends on the style and how many trades you take and everything in a time frame. But there's some metrics that I've been able to kind of gather over time that make sense to me these days, and I try to aim for these things as my target for metrics when I do my backtest for the strategy. And that's also valid for after you're done with the backtest, like when you trade live. That's also valid. First thing is the profit factor. You want to have a profit factor that is beyond 1, ideally around 2, but no more than 3 or no more than 4 for sure. The thing is, if you have a really good profit factor of 3 to 4, then it's likely to be over optimized. The results are too good to be true, and they won't be true when you trade live with demo in the market after. So very crucial here to have a good profit factor, but not too high. And of course, below 1 will be not profitable, so you want to have at least 1.5 to 2.5 are like the optimal points for a good profit factor in my experience, of course. Next is you want to look at your drawdown, and you want to make sure the drawdown you have with your strategy is decent and will not stress you out too much in the market. If you have a 10% drawdown, that's for most people alright. If you have a 8%, less than of course 10 is good. If you have 12, 13, 15, that's acceptable. I've had these drawdowns myself in the past, these 12, 15% drawdown. They hit, but you can still recover pretty well. Your mindset is not too impacted by them. At least for me. That you gotta decide, of course, for you. You gotta see how you deal with those things. If you get beyond 15, 20%, that's, in my opinion, too high. You better to decrease your risk per trade to make it less and to be able to go through these drawdowns more easily. There's no point having a high risk per trade only to go through big returns and a big drawdown after. Okay, that's not good. But on that regard, when it comes to drawdowns, you want to make sure that your average yearly return over your maximum drawdown is at least 3 to 1. So that if you have a drawdown, you're able to recover during the year. What that means is, let's say you make 30% per year on average, your maximum drawdown being 10%, then you get a 3 to 1 of returns per year over maximum drawdown, which is pretty good. Okay, you're able to recover that maximum drawdown during the year if you already have it. If you make, let's say, 100% per year, but then your drawdown is like 50%, that is too high. That is a 2 to 1. That's, in my opinion, not good. Your drawdown would be too high, plus 50% is really hard to recover in that case. So you want to make sure these things are taken care of with your metrics. Again, those are things that help me, but they might not be the same for you. I'm just sharing here from experience and things I know worked for me in the past, but you can decide, of course, if that's valid for you or maybe not. Once you've taken care of all these things, the next step is the funniest one, but also the most scary one, and that is what I will call is slowly scaling up. You've got your strategy, you've got your setup, you know it works in the market, you've tested it, you've got some good metrics, but now comes the time when we got to scale this up. So if you were in backtest first, we've got a couple of steps, we've got a couple of options to move forward, and that's what I did myself. I went to demo. I didn't trade demo for a very long time. Mistake in my experience. I could have done this better. I could have been demo for a longer time. But I just didn't like the demo aspect of it. Yes, in all honesty, I'm saying this because I recommend my traders to trade demo first always for at least 30 days minimum. I didn't do it. That was my mistake. Again, I'm showing here from experience and I want to be honest with you and straightforward. But demo is good for a month. Test it out. See if you get the same stats you had in your backtest or similar statistics. Then you can move to live after. On a small account, go for a whatever is small for you. Could be 1,000, 5,000, 10,000. It depends on your own monetary aspect and your finances, of course. But then once that's done, we can start to scale up. So what I recommend is, and what I did myself is I added 20% of my capital. Each month I was profitable. So let's say you get your first month, okay, you got like a $5,000 account. So that month profitable, you get like 2% increase. Then you add 20% to your account. Let's just say 20% of $5,000. So we are adding $1,000 more in your account. Okay, that's if you have the capital, of course, on the side. Next month, let's say it's a losing month, you can stay there. So just add this $6,000 account. Next month profitable, add it 20%. And then that way, you're able to increase progressively your account, scaling up in your account. If you need prop firms, that's another thing we can talk about, these funded accounts. I'll leave a link here in the corner to this video I have about prop firms so that you can learn which prop firms is best for you and how to scale up with these prop firms in the next year. That would be a good way to do it also. So you can start to this to your small account yourself, trade a few months, maybe not increase the capital, but then go for a prop firm challenge after. Okay, these are all possibilities. This is going to be dependent on yourself. The way I did it myself was through my own capital, and I also traded for an investor, which is a different topic there. That was a private investor, not a prop firm. But yeah, and any questions you have about this, I'm happy to help out. Happy to answer your questions. Leave me your thoughts in the comment section below as always. Give a like to that video if you liked it, and subscribe if it's not done yet. And I will catch you back here in the next video pretty soon. Ciao.